Philip Hildebrand, who was the central banker in the Swiss National Bank. He had to leave because of his wife's currency trades. Anyway, he's back and he's writing in the Financial Times, and that's why everyone should pay attention, particularly the Europeans. He has this out with Lee Sachs, who's a former counselor to the U.S. Treasury. Eurozone needs to grow, and to grow, it needs to fix its banks, and to fix its banks, it needs to follow the U.S. example. They say the U.S. Treasury pledged that any bank that did not raise sufficient private capital would instead receive the capital via investments by the government. This marked the beginning of the end of the banking crisis. Bottom line, it's the banking system in Europe which is having trouble lending, and this is why Europe has a growth problem. They need to immediately address the capital concerns, and it means bailouts if they can't raise it in the private market.
On a game theory basis, there's too many moving parts. It's not like the United States.
It's not. Well, I mean, certainly you have the political problems, especially when you're talking about government bailouts, but we've heard it before. It starts and ends with the banks. It's intertwined with the sovereign crisis.
Starts and ends with the banks. The U.S. banking crisis may have ended, according to these gentlemen, but for some Wall Street firms, the reputational damage lives on. Robin Farzad, who's a contributor to Bloomberg Business Week, writes a nostalgic piece in the Bloomberg View about his salad days as a post-college junior analyst at Goldman Sachs. It's the same two-year program that Goldman says will no longer extend contracts to. And Robin writes that after the crisis in Abacus, after Vampire Squid, and after Greg Smith, a stint with Goldman was no longer the apotheosis of Wall Street status. But what chiefly made Goldman's move inevitable was the loss of what it chiefly marketed to fresh college hires. Its peerless reputation. So a point of view there from someone who attended Goldman's program back in 1998, back in the glory days, and looking back at what the firm has done and what it seems to have lost in the process.